What's up, everybody? We'll be with the Blacksmith Podcast back again with another one. And guess what? We are going to finish the Robinhood earnings call. Yes, part three. Without further ado, let's get to the video for you. Bars.
Most, if not all, of those events. So, and I should say, there's been a lot of noise about this by the industry. I don't think anyone's kind of figured anything out yet. So we're still early, and you should expect us to be not just early, but kind of at the
All right,
forefront
so
of
he's
this area.
finishing a question he did in the second
Great.
video.
Thank you, Vlad.
Here comes the new
Next question is
material.
from Steven Chubak from
This is
Wolf.
part three.
Hi, good afternoon, and thanks for taking my questions. I'm sorry, I said
Steven.
questions. Chris, to be clear, one question only.
Thank you, Steven.
And this relates to just sec lending in particular, and that has remained under considerable pressure, not just for you, but for industry peers as well. At the same time, the outlook here is pretty constructive given both this large slate of IPOs that are coming, as well as just above normal retail allocations for those IPOs as well. So given that you've had more of your clients opt into fully paid sec lending, was hoping you can contextualize just how meaningful of a windfall this could become. And I'm going to break my own rule. If you could speak to take rate dynamics for 2Q, that would be
You
helpful
turn
as
this
well.
up.
Shiv?
Yes, I'm happy to take this one.
The money
Great
man.
question. So
Let's go,
first on
Shiv.
securities lending. As a reminder, this will show up in three different places in the financials. First is sec lending net. It'll also show up in segregated cash because when customers have securities lending, we get GC collateral back and we reinvestment. Will also show up in margin interest as customers borrow on margin. So when you look at the financials, what you saw is customers continued to opt in and use the program and fully paid. The margin book continued to grow. What you did see is securities lending net, which is primarily based on the rebates rate, was lower. As you mentioned, Steve, that's mainly because lower volatility, lower IPOs in the market, so specials rebates was lower, so that's what brought that down. How do we judge the business internally and its health? There's just two main things I look at. One, are customers opting into fully paid program? And two, how much assets are opted in? So right now, it's about 25% of customers have opted into fully paid and about 50% of assets. So really healthy adoption, but we also have a long way to go. It's hard to predict what's going to happen on the specials rebates rate later in the year, but right now it's at a low. And if the market comes back or if you see IPOs come back, you could see it rebound there. To your second question, we'll answer it even though Chris said limit to one. So take rates. As a reminder, this is an output metric. We goal on market share and are we winning, and everything that we see is that the case. What happens to take rates is when active traders trade more, take rates naturally go down because we have tiered pricing. This is a good thing. It means they're engaged, they're using our products, and relative to a few years ago, we're actually seeing a much healthier adoption of active traders during some of these macro events. So what are we seeing to start the quarter? On crypto, it's about 7 basis points lower, and on options, it's about 3 cents. However, we're starting to see that rebound in the pickup of April. So again, it's an output metric. We focus on active traders and market share, and everything we're seeing is super healthy.
Yeah, I borrow on
Thank you,
margin.
Shiv, for the doubleheader.
And let me address something in the comments right here. Do y'all see this? Why your stock tanking? I'm guessing that's why is your stock tanking? Right now, Robinhood is sitting at $74.75. Over the past week, down 11, almost 12%. Over the past month, up 11.5%. Over the past 3 months, down 22%, 35% since January. Year over year, though, they're up 59.81%, 80, so 60%. So why your stock tanking? First of all, let's learn to speak some correct grammar here or type with correct grammar. And then second of all, look at the facts. The stock is up 60% year over year. So if you really think about it, if it's down 35% since January, now would be your buying opportunity, not why your stock tanking. Thank you.
All right, the next question is from Ben Budish at Barclays.
Hey, good evening, everyone. Thanks for taking the question. Maybe just tying this into Steve's question on sec lending. Shiv, I'm wondering if you could talk a little bit more about your margin funding. I think it's been a little bit of a source of confusion for investors. You've been moving bank sweep cash or the brokerage cash. I think you've been talking about using some of the sec lending related cash. So maybe just any like modeling, help you can give us there. How should we think about, your future plans given your margin balances are growing more rapidly? Would all be helpful. Thank you.
Yeah, happy to take it. Great question. So, on the margin book funding, what you'll notice in Q1 is we moved over 6 billion of cash that was off balance sheet, that was in the sweep program, onto free credit balances onto balance sheet to help fund the margin book. No impact to customers. They get the exact same rate, 335, one of the best in the industry. This
That's
was more of a
right.
back end accounting change.
That's
It
right.
also helps, as you mentioned, on the funding of the margin book. This is very common in different brokerages before. So, just with the health of what we're seeing, we decided that was the right time. What would I expect from modeling going forward? They'll stay roughly at this rate. About 25% of our free credit balances today is in this. So 24 billion in sweeps, and then about 6 billion from free credit balances. It might move a little bit around quarter to quarter, but I think that's the way you should look at it. And then most of our free credit balances will continue to be earning the same rate that we do, but this 6 billion will have a smaller take rate, more akin to our sweeps take rate now that it's moved over on balance sheet.
Perfect. Quick and easy.
All right. Thank you, Shiv. The next question is from Craig Siegenthaler from Bank of America.
Hey, Vlad, Shiv. I don't know if you can see me, but I obviously can see you, and good to see you both.
We can see
We
you
can
and
see
you
you.
look great.
There you
All
go.
right, so I have a follow-up on AI, but not Cortex and not agentic AI, but taking this one step further, where are you in the process of rolling out AI-powered financial advisors? I believe you're working on it. I think you've said before you're in talks with regulators, but can you kind of share a timeline with us?
Yeah, for sure. So I think when people talk about AI powered financial advisors, they can mean one of two different things. One is just specifically advice on what to invest in, right? And that can be a spectrum of things as well, like trading recommendations and allowing you to build trading strategies with that Reg BI compliant capability. It could also mean like robo advisor services. So for the latter, we have Robinhood strategies, and for some of the work that we're doing on the agentic side, you should expect that that increases in capability as well. And everything that we do, whenever if we do add recommendations, we got to make sure they're in accordance with Reg BI and all of those rules. So we're making progress on those things, and with Robinhood strategies, I think it's the best like deposit money and we invest it for you product out there today under the fiduciary standard. We actually published some returns and historical performance a couple of weeks ago, which look really good. Now, the other thing people mean when they say financial advice is I want help just managing my entire spectrum of financial things, right? And that involves your banking, your spending and budgeting, your estate planning. And we'll have a solution there for you, multiple solutions. So with Trade PMR, some people still want humans. And I should point out there's a synergy conference for Trade PMR coming soon where we're going to start unveiling some of the things that we've been working with on the human advisor side. And I think that's a durable product. We should expect human advisors to be around because that fills a very, very specific need that I don't think AI is quite going to fill in the near term. Then for the other things, we are working on digital self-serve solutions. We ran a pilot for concierge where we can do your estate planning, we can do your taxes for you. That's been very successful. And through our self-serve offerings, we also have helped customers with their tax preparation. So we're kind of stitching these things together.
Yes,
You
they
can
are.
imagine as we agentify more and more of our endpoints, that lowers the activation energy to having Cortex or AI assistant seize everything. But I think first, our strategy is going to be to make the capabilities available on an individual basis and later to kind of stitch them together for you.
All right. So if you really think about it, what he just talked about with AI powered financial advisors, if you can give financial advice through an app, if you can trade stock, if you can invest in stock because they are fundamentally different, if you can bank with them, i.e., savings and checking, If you can have saving CDs, you can have IRAs, you can have, the Trump accounts, which are the, what do they call them? Not minority. They're underneath 18, the kids, IRAs, retirement accounts. If they will help you prepare taxes, if you can do a budget, if you can track expenses, this is a one-stop shop. They have a credit card, so they're a lender. They let you borrow a margin, so securities lending. They're gonna do home loans, car loans. Listen, one stop shop over here. This is my MVP. You guys got to see. You have to start having vision. Don't just use your site for where they are now, use your vision for where they're going.
All right. Thank you, Vlad. The next question is from James Yarrow at Goldman Sachs.
Hey, good afternoon, guys. Thanks for taking the question. I just wanted to touch a little bit further on crypto. Maybe just any views on when crypto volumes and prices could stabilize at a high level, and perhaps also just the trends you're seeing across your crypto franchise, across client types. And I know you commented on the near term take rate dynamics in crypto, but maybe just your thoughts on longer term, what your crypto take rate could do over time.
Yeah, maybe I'll hit the uh, outlook, and then you can hit the take rate, Shiv. So when we talk about crypto, I think it's important. I want to get away from talking about the price of Bitcoin or all of the other native crypto assets. Our strategy is to take crypto infrastructure and apply it to assets that have real world utility. That's why we care so much about tokenization. Um, and you should expect that this is going to be, I mean, we're at the very beginning of what's going to be a tokenization super cycle. You're starting to see it a little with the stables. You'll see it with stocks as well. And we're going to be at the beginning of that. And I think you should expect that at the crypto event that we're going to have in July, tokenization will have a starting role. And I think there's a lot of work to do there, but we're still very, very early. So crypto is two things. It's like Bitcoin and other crypto native assets, which I can't tell you what the price is going to be in 3 months.
Sure
Price
can.
moves up and down. But
That's
what
right.
I can tell you is crypto as technology infrastructure is going to be big, and we're investing. We've got Robinhood Chain, we've got Robinhood Wallet, we've got our tokenization initiatives, and I think we're still very, very early. So this is going to play out over many years, and you'll see the next phase of what we've been working on in the UK in July.
Yeah, and on the monetization side, a couple things we point you to. First, we are crypto bullish, as Vlad said, but it's less than 20% of our revenue last year, about 18%. So it's an important part of the business, but we've vastly diversified. On the take rate specifically, it's an output metric. It's not something we goal on. But we're seeing as active traders remain on the platform and we're winning market share. And so we're going to continue to invest there. The counterfactual is take rates could be higher, but you wouldn't have as many active traders. And so we don't want to goal on that. As I mentioned, it's a little bit lower in April, but we're already starting to see a rebound. The other thing we're super excited about is institutional. And so we bought Bitstamp last year, the crypto exchange, seeing really healthy market share there. Institutional tends to be more resilient throughout the market cycles, and so we're gaining share there. So everything we're seeing is still healthy, active traders, growing an institutional book. And as Vlad mentioned, we're making big investments in tokenization and on the infrastructure side as well.
Y'all stay with me. I'm going to do
All
something
right.
here
Thank you,
while they're
Shiv.
talking.
All right. The next question is from
Let me
Patrick
get my
Moley at
chapter.
Piper.
Yes, good afternoon. Thanks for taking the question. So Vlad and Shiv, one of the things you guys have done great historically has been in understanding where the puck is going in terms of retail trends, whether that's altcoin trading and Dogecoin or prediction markets here more recently. But I think the biggest story in my mind in retail trading year to date has been in perpetual futures. And I don't know if we've touched on it yet this call. I know you launched crypto perpetual futures in Europe in the fourth quarter. So would love to get your thoughts or just an update on how that rollout's gone, what adoption trends have looked like. And we've seen volumes kind of explode on some of these on-chain venues like Hyperliquid. So, Vlad, would love to just get your broader thoughts on perpetuals as a product going forward internationally, and what are the hurdles to maybe offering that to U.S. customers as well? Thanks.
Yeah, absolutely. The perpetuals product, I'm glad you asked about it because in Shiv's answer to the last question, I was going to butt in and say, perpetuals overseas have been doing really, really well. And of course, we've listed those on Bitstamp, our exchange, and are making them available to EU customers. And we're seeing healthy growth. The product keeps getting better and better.
I'm gonna do
It's
something
a
right here while
regulated
he
product,
talks.
unlike some of the on-chain competition, which means that we can't go quite as high on the leverage that we offer to customers, but customers have been requesting, and we've been increasing that. So yeah, we're doubling down. We've got our perpetuals team is working hard, and we see an opportunity to offer even more to customers. Now, as far as the U.S. goes, we do need some rule changes to offer perpetuals here. The products that some of the other firms have been offering that they've been calling perpetuals are really just long expiry traditional futures contracts. So you don't quite have perpetual contracts in the US. And I think that's actually not an amazing thing thus far because people have been going to these unregulated offshore entities where there's not as much protection, not as many rules. So yeah, stay tuned. Of course, we're engaging with the regulators, and we have the ability, since we have this product in the EU, to roll it out in the US as well. And I do think it's an attractive product for active traders. So we'll definitely be on the front lines of any perpetuals expansion or regulatory easings here.
Read
Okay.
this right here.
Thank you, Vlad.
This
The
is
next
why they
question
missed
is
on
from
earnings.
Tanner from Future Investing.
Tanner.
This is why.
Hey Vlad, hey Shiv, thanks for having me, guys. My question's on AI and automation. You guys have been early here at Robinhood, but how's this shifted your hiring strategy, and where are you seeing efficiencies or reduced hiring needs across the organization?
Hiring strategy. Now
Sure.
that's a good question.
Yeah, happy to take this. So a couple of things I'll point you to. Last year we said we had $100 million in efficiency,
Let's go.
primarily in CX and software engineering. If you look at our volumes last year, they grew about 50%, and hiring and customer service was about flat. And so while we didn't need to reduce any hiring, what we were able to do is absorb all of our volumes through the increased productivity, which is great. What we're doing now is we're just shipping faster. So we're still hiring engineers, we're still growing, but we're using the efficiencies to just keep delivering for products for customers. And so that's where you think the big unlock is going to come. But it's not just engineering, as I mentioned. So everybody across the firm right now is adopting AI. They're using it in their workflows. We're getting AI pilled. It's been incredible to see. And you're going to see that start to go out in many areas. So marketing is a great example. The team just launched some campaigns that were built end to end using entirely AI, which is great. All of the non-developer teams are also using them in their workflows. So for us, I think the biggest thing is we can absorb volumes through AI efficiencies, and we can ship faster for customers across many different vectors.
All right, thank you, Shiv. The next question is from Brian Bedell with Deutsche Bank.
Let's go.
Hey guys, can you see me? Oh,
Yes.
looks like my video's stuck. I don't think my video's working. Okay, can you hear me? Okay.
Yes.
Yeah, we can hear you.
Yes. All right. Great. Good afternoon. Hey, just wanted to just touch on the trading behavior between active and less active traders. So really, as you bring in more accounts and the net deposits continue to really perform very well. How are you seeing the customer mix evolve from those new deposits? So what I'm getting at is, to what extent are these more active traders and you're building that book faster than, say, the less active traders? Just thinking about how the different market environments could influence the trading patterns. And then also just on crypto as well, are you seeing a lot of cross currents between
He's asking
those
multiple
active traders
questions.
using crypto, or is that really a separate?
He's trying to skate
separate
the
class of
rule.
traders?
I mean, one of the things that we've been really excited about is
I'm gonna put
the
this
growth
away.
in gold attach rate. So remember, the gold attach rate of new customers used to be in the low single digits, and now it's 40%. So 40% of new customers that come in end up adopting gold. And that customer typically then goes into the high yield offering, which is a great value prop for gold. So if you remember, if you have gold, you get interest on your cash on Robinhood with 2.5 million of FDIC protection. You also get interest on your options collateral, which for the active traders is a very, very nice new feature that they've been asking for a while, along with just like dozens of other things, right? You've got the gold credit card, banking is a gold only offering. So we've been, the behavior we've been seeing is someone comes in, a large portion of the time, they try gold, then they start looking at all the other products that we offer, and we've been really successful in kind of driving that adoption. And trading might not be a daily use case for most people. I mean, some people build up their portfolios, then they kind of trade a little bit less frequently. But some of the other products, like your banking, your credit card, are daily use case product. And I think we have a huge opportunity in the coming months and years to get more and more of our customers into banking and credit. And then we think that, even though the numbers are really good with 800,000 cardholders and 125,000 bank accounts with a 40% direct deposit attach rate, these are still relatively small numbers. And I think we've got a lot of wood to chop to get more and more of our customers on them. So I think that'll be a big tailwind to multi-product adoption over the next year.
Yeah. In terms of where the
Uh-oh,
deposits are coming
Shiv,
from,
let's
I
go.
think the main way to look at it is just broadly diversified. So as Vlad said, it's going into retirement, it's going to ETFs, it's also going to high yield cash, it's also going to trading. So it's one of the benefits of being diversified business. That's one of the ways we have the 18 billion net deposits. It's customers using the platform in a wide variety of ways.
So their growth explained is pretty darn simple. They said once a customer comes for one thing, we rehash them and get them to go to two things. They see that we have three things they like. So for instance, I I buy stock. I invest on their platform, but I also start an IRA. I also have their gold card. That's three right there. I have more, but we're going to stop right there. So I'm not a customer just once with them. I'm a customer over three times with them. One customer, but three products. So that brings in a higher volume of money. And that's what they're talking about. And that's why I love this company.
All right. Thank you, Shiv. Thank you, Vlad. The next question is from David Smith at Truist.
Hi, following up on the discussion about banking, could you talk a little bit more about the extent to which you see this driving new customer growth as opposed to like ARPU expansion and the leverage you see for both there?
Yeah, I think that there is a lot of potential there, and we haven't really tapped it because right now,
Let's
the way
go.
that we've been giving customers banking is we've largely been giving it to gold card customers, and gold card customers or the gold cards are largely being driven by existing customers. So it's the story has really been getting our existing customers to adopt the gold card. Now, I think over the next year, you should see it shifting a little bit more from that to getting new customers on board who come specifically for the gold card and adopt our brokerage and retirement services as an adjunct to doing that. We've run some experiments there, but there's a whole bunch of things that we'll have to do to make that smoother and nicer that I think we're excited about. So yes, big opportunity. It's been really about proving the economics, and we frankly, I think, despite the fact that some customers wish they could get the gold card earlier and earlier, if you look at successful credit card rollouts and the speed with which we're rolling out these cards, this is actually right near the top. Like by all objective measures, if you look at card programs that have rolled out faster than us, they've pretty much gotten into trouble, right? So we're right up there with like fast yet responsible rollout. So we haven't
Fast
been
but
limited
safe.
by this at this point. But as we approach
Haste makes
as we get
waste.
into the millions of cardholders, should expect a little bit more top of funnel with the card and banking, which I think increasingly is going to be part of the same package. I mean, when you think of Gold Card, you'll think of banking as one and the same.
Excellent answer.
All right.
There's
Thank you,
nothing else
Vlad.
to say
The
on
next
that.
question is from John Todaro at Needham.
Hey guys, good to see you. Thanks for taking my question. Wondering if we could just go back to Bitstamp for a moment. As you pointed
Crypto.
out, it's obviously been quite resilient despite the crypto downturn. You'd mentioned institutional lending earlier on the call.
Okay, let's stop right there 1 second. So this guy, somebody in the comments had asked, why is the stock plummeting? And right here, if you had just asked AI why the stock had plummeted, it would have told you that crypto had a downturn in the market, nearly 50% year over year, right? And they are big on crypto. They acquired Bitstamp around July, August last year, right? And that's the oldest crypto institution. Crypto is a huge part of their revenue model. If you go back and listen to Vlad talk about the numbers, right? So you could have answered that question yourself. With AI out there, you should be dumb about nothing, yet we are naive about a lot of things because we just don't seek the knowledge. We'll ask why out loud, but never go and seek the answer. You know, and that's just the difference between our generation and Plato's generation. Back in Plato's day, there was one scroll in Rome in a library, and you had to journey 6 months halfway across the world by horse, mule, boat, climb mountains to get to it, and then write it down, and then study and write it down, and then safeguard that scroll if they let you copy it back to get it back to where you came from through rain, sleet, snow, water, all of that. You had to safeguard it. Think about that. That's why those people were so much smarter than us, because the information was not readily available at our fingertips. But when they got it, they held on to it like it was near and dear to them, like it was the last breath they could ever take, and they held on to it like it meant everything, right? And we have all the information at our fingertips. I just showed y'all on camera why their stock had the sharp decline. And this guy is asking in the comments, you know, instead of looking it up. Rant over, the end.
Wondering if you could expand on that or more cross-sell opportunities within that segment to kind of drive some additional revenue beyond crypto trading.
Yeah, I mean, I would just tell you at the high level. So we closed our acquisition of Bitstamp about a year ago, and one of the first things we did right around our crypto event in the south of France last year was we got together with a lot of our institutional customers for Bitstamp. We had a nice lunch, and it was very eye-opening because I got my notepad out. I was like, tell me, you know, all the things that I need to write down. We're going to deliver them to you in record time to make sure all of your volume happens on Bitstamp. And, you know, I was expecting all these fancy things, but it's like, I just want you to not drop my packets. When I submit an order, I want you to acknowledge. So it's like basic stuff, right? And we just went through, we've been fixing that stuff. Our exchange at first couldn't handle a huge throughput of messages per second. So we were like getting throttled. Things were slow, right? So the engineering team has been doing yeoman's work of fixing all of that. So you're talking about, you know, increases in institutional market share and all these things. There's just a lot of low-hanging fruit here, which is what makes us so excited about you know, all the things that we're adding. And this is even before the institutional lending desk upgrades, before all the things that we're doing with perpetual futures. So I think we're at the very beginning, and you know, you should expect, you know, telling the customers this, you know, keep giving us the list. We want to earn your institutional business, and I think we've demonstrated that this team can ship.
Yeah, on the institutional lending side, it's
Let's
actually
go,
very
Shiv.
simple, as Vlad said. A lot of it's just working capital. So you're not taking credit risk, but a lot of the institutional clients are used to having capital to trade either instantaneously or in working capital needs, whether it's overnight or on the weekends. Given our balance sheet and our technology, we're able to provide that. And so it's another thing that was just a low hanging fruit that we're seeing really great adoption on, which is another way to monetize, but also grow market share.
All right.
All right, I'm going to end the video right here, but we only have a couple minutes of this left, so part 4 is going to be pretty short. But one thing I want to address, you see this guy right here, Aaron Lee, celebrating stock sync. Who is celebrating the stock going down? That just doesn't make any sense. So you could tell the neophytes, as it were, rookies on the stock call. And it's not just because it's Robinhood. Just pay attention, man. The stock is going down. Okay, that's what you can see from the outside. But understand what you're looking at is an onion. It is not a block of cheese and you just bite into it and it's just one layer, right? It's an onion. They are in so many different things. There's new customers, right? So there's the new customers, there's gold customers, there's credit cards, there's margin, there's trading, there's investing, there's crypto, there's banking with the savings and checkings account. There's the gold card, if I didn't say that. There's IRAs. Man, there's so many facets of the business. And if you'd have been paying attention, they just told you why the business is going to be all right. But you can't hear that because all you're doing is looking at the price of the company, of each share, and you're saying that's their overall value, whatever they went up or went down today. That's a rookie right there in the comments. That is a straight neophyte. That person needs to watch the earning calls and pay attention. You need to subscribe to the Blacksmith Podcast and I'll learn you. All right, folks, the 4 is going cold. I love you. Like, share, subscribe, hype the video up, and let's get this financial literacy and stay away from folks like this. And treat them like a brother, right? Make sure somebody should tell them, listen to the whole earnings call. If I was on it, I would have told them that, but I was at work. I'm active duty. I can't just come out for the earnings call. But one of these days I might take off and be there for an earnings call. And if I see anything like that in the comments, I'll educate them. Don't even worry about it. Blacksmith out.